Now, as you know, on a Tuesday, every Tuesday, we speak to Sabir Munshi of Lunar Capital. And this week, totally excited to do this interview. This weekly market and investment slot is brought to you by Lunar Capital. Lunar Capital is a registered financial service provider, and they provide local and offshore investments. Let's welcome Sabir Munshi to the show. Good morning, Sabir, and how are you doing today?
Good morning, Nazia. I'm doing very well. I hope you and your listeners are also doing well. And yes, please keep a safe distance if you're driving. It's treachery weather. We welcome the rain, but it's also, treacherous times on the road. So please be careful.
Absolutely. Thank you for that, Sabir. Definitely looking forward to speaking to you today. And you've made us very interested in following the markets. It's been quite a rough time this year. How do you manage through this?
That's a very, very good question, Nazia. So the markets this year have been quite rough. If you take the JSE, for example, it's been down, year to date, it's down about 6%. But even, at some stage, it was down closer to 15-16% during the year. So, kind of drop and then recovered a little bit. Similarly, the U.S. markets represented by the S&P 500 is down about 21%. The Nasdaq is down about 34%. And these all on the back, of the performances in 2020 and 2021, when those markets in 2020, in fact, went up, the U.S. markets went up over 40%, and last year over 20%. So when you get this big kind of runs in the market, we call it a bull market. Bull market is when the markets go up. Generally, stocks become overpriced. And when they become overpriced, there is naturally, the potential for a downturn in the market, and that's what we're seeing this year. So what we saw last year, was that when these markets were quite high, we thought the markets were very high. So what we did was we basically kept a larger cash position than we would normally keep. So for example, we went into the year with a cash position of about 20%, and in fact, even now, we sit, with about 17.5% in cash and 5.5% in bonds to try and protect, the value of the investments. But despite that, even our fund, this year is down about 14%, for the year. So how we navigate, obviously, as I said, one of the things that we try to do is we hold a larger cash position. And secondly, what we see is that as these markets come down, we start seeing better value on especially good quality stocks that we want to own for a long time. And that's what we've been doing, is that as we see, these good quality stocks coming down in price, we buy a little bit more, trying to get them in at the cheaper rate, cheaper than what we would have bought, say at the end of last year or at the beginning of this year.
Sabir, how are you now positioned?
Yes, so actually, as I said, we are a little bit more conservative. We hold a larger cash and bond position, and at the moment, for example, about 58% of our fund is invested offshore. Okay, which means obviously 42% locally, and then with the larger cash positions. We sit and we wait, and if we see, a good quality stock coming down in price because the sentiment is low, but we think the value is good, we buy those stocks. So a little bit conservative. The other thing that we try to do is that, we in the longer term, we want to have a larger offshore exposure because that's a much broader market, than what we have in South Africa. It's not to say that South Africa is necessarily a bad investment, but we just have much better long-term choices offshore. So interestingly, in the last few days, the rand has been strengthening. So we get a little bit excited about that because, as the rand strengthens, we can use our rand cash position to buy dollars and use those dollars, to invest in offshore companies.
When do you think this volatility will end?
Nazia, that's a very, very difficult question to answer because, if I had a crystal ball, then I'd be a very, very, very rich person, And in fact, there's a saying in the markets. In fact, there's two sayings, but let's start with the first one. They say that, firstly, nobody rings the bell when, the market is either at the top or at the bottom. So nobody really knows, when the top of the market is reached or the bottom of the market is reached. So I can't truly tell you. All I can tell you is that some of the companies that we want to be invested in are much better priced today than they were a year ago. There's another saying in the market, and they call it, you cannot, time in. So in other words, TIME space IN. Time in the market is better than time in the market. So time in, TIMING. So it's very difficult to time the market. But if you stay in the market, in other words, if you spend time in the market, you have a much better chance of earning good returns in the market. And that's our philosophy, at Lunar Capital. We try to stay invested. Somebody could say, but if you thought the markets were overpriced in the beginning of the year, why didn't you just sell everything and hold cash? And the reason is, as I said earlier, very difficult to time, the top or the bottom of the market. And at the same time, if you stay in the markets for a long time, you'll make the returns. And what you see is that it's not just a straight line down or a straight line up. It actually goes up and down, up and down. And if you miss some of the up markets, you could really lose out on a lot of your returns. So broadly, I would say, volatility, very difficult to anticipate. There is still some risk in the market. The Ukraine, war situation, in South Africa, our electricity crisis, in international markets, increasing interest rates. All of these, present, a number of risks in the market. But the market anticipates that, and the market tends to price that in. And there's a point at which, the market will say, yes, we understand that interest rates might still go up a little bit, but actually, the value in the market is much better, and that's the time when you see a big turnaround. The last thing that I want to say is that one of the reasons we also stay in the markets is that, as I said, 2020, 40% return, 2021, 20% return. We down, the Nasdaq is down 34%. But that, after, 1 or 2 years of significant losses, you do generally find, a big bounce in the market. And you want to be invested in the market, when that happens.
Sabir, as always, this conversation empowering us with more knowledge. And I think a lot of people out there are more aware when it comes to investments, and it's definitely a learning opportunity for us. Thank you so much for this very informative talk.
Thank you, Nazia, and thank you to your listeners for listening to us.
Thank you, Sabir. For more information on Lunar Capital's investment products, visit them at www.lunarcapital.co.za. That's Lunar Capital, one word, or email them at info@lunarcapital.co.za. Sabir from Lunar Capital will be back with us next Tuesday. Thank you so much to Sabir from Lunar Capital.